What's up, guys? Welcome back to UCR Forest Academy. Welcome back to this UCR Forest YouTube channel. Should in case you're coming across my channel for the very first time, my name is Uche Chemeze Richard, popularly known as UCR Forest. So, in a particular YouTube channel, I do quality tutorial videos based on forex trading, which I would want you to go and check out some of the videos I've dropped in the past, if not one or two, could be of a massive helpful guide to you. Okay, and if you found my videos be very interesting and very helpful to you, please like and subscribe to my YouTube channel. Turn on your notification icon so that you'll be the very first person to be notified by YouTube whenever I drop a new video. In today's lesson or in today's video, I will be teaching you liquidity, and I will tell you, I will show you the reason why you are struggling with what SMC. This is a particular video that covers a lot of benefits which I wouldn't want you to miss out. So you don't have any reasons or you don't have any excuses to say, let me just go and do, or let me skip the video or do that. Please watch the video to the end. Believe me, if you are the type that normally whenever you mark out a zone, the market will sell a little and then stop you out, this video is for you. If you are the type that you whenever you mark out a zone, the market will tap into your zone and they clear you, and then the market will start moving in your direction, this video is for you. So why would you in the first place be ignoring or wanting to skip this video? No, nah. So please like and subscribe to my YouTube channel. Also, if you have been looking for an online academy or an online academy where you want to learn forex from beginners level to advanced level, all right, let me tell you something. UCR Forest got you. And in this particular academy, we care more of each of our students' development. Believe me, when you enroll into our academy, we with our unique way of teaching, you are not going to come out without not achieving your dream. You are going to achieve the reason and purpose why you enrolled into our academy, and you have a lot of benefits. We don't have even any time duration. It's not like after 2 months we are done with you, after 3 months. No, it's just a lifetime mentorship, okay? It's a lifetime mentorship, and you are definitely going to benefit a lot. UCR is one of the most patient and consistent teacher there who is going to have so patient in your development. That is what you should be looking out for. All right. So without wasting much of your time, I would want to be telling you that this Euro USD setup is what we'll be using to explain this whole topic. All right, we'll be using this Euro USD setup. This setup was shared in our free community, in our VIP community as well. We shared it in our VIP community where we analyzed Euro USD from higher time frame down to lower time frame. This was when we shared the setup, right? So you see, the market tapped into our zone and the market played out, as in it just tapping, played out, hit full TP. And then we also have this setup here on BTC USDT. This one, boom, this one played out and gave us what? Full TP. Even when we analyzed it and posted it for the students in the VIP community, the market played out. You can see this was the first time we analyzed it, and then I think somewhere around here we gave the that particular analysis, and then the market, look at it here, the market played out very, 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 very perfect. You see, the market tapping and sold massively to the downside. So we'll be using this Euro USD setup. We equally use this BTC USDT because we have been having, we have almost like three straight winnings on BTC USDT. So I think I will still use that as well to analyze this very whole thing for you, to explain this liquidity for you guys. All right. So I'll be using this very particular one. I'll analyze this as well, and I'll analyze this one that happened recently as well. So that is what we'll be covering on today's lesson. So I know that you wouldn't want to miss out on these kind of things now. We even have GDP USD as well. So please stick around and watch this video today. And so the first thing we are going to do, number one, is that we need a clear chart. We need a clean chart. We need the what? We need a clean chart. So the reason why we need a clean chart is because that is number one step. So we need to really have to clear our chart, number one, to see what the market is doing. Do you understand that? So the first thing we do now is that we're going to go to daily time frame. After clearing our chart, we'll go to daily time frame. When we go to daily time frame, there's a reason why we are going to daily time frame. But if you want to discover the reason, all right, I've made a video about top-down analysis. You need to check out my channel. You need to check out my channel, UCR Forest channel. You need to check it out. Check my channel out. Check it out, YouTube, UCR Forest Academy or whatever. Check it out, and then you are going to see the video I made about top-down analysis. Go and watch the video. That video will help you on how to analyze the market from higher time frame down to lower time frame in search of a good entry opportunity. That's my channel. Like and subscribe to it. Just go to that, search for the top down analysis. You're going to see it, and then you will come to understand the reason why I am going to higher time frame. All right. So what I will do now, number one, is that I will analyze this whole thing for you guys. Explain where there is liquidity. Then we will now go to XNES backtesting to XNES backtesting to. Then we use that XNES backtesting to reanalyze it again for you to see how this thing normally play out. All right. Or better still, let's use SNES to do this whole thing. But if we use SNES to do this thing, SNES does not have a feature where we can switch to time frame to time frame. Do you understand? So that is the reason why I wouldn't even want to use it from the beginning to the end. So let's use the normal trading view, analyze everything, then come back to XNES, then mark out that zone. Then we will now see how it will play out. If you don't understand, don't worry, watch to the end, you understand. All right, now let's start with Euro USD. So this is Euro USD. We go to daily time frame. All right. So when we go to daily time frame, this was the first thing I was looking at on daily time frame. What's the trend of the market? That's number one thing you need to know. What is the trend of the market? The trend of the market is always very important for you to understand whenever you come to the chart. If you can't interpret before you start marking out all those lines you normally mark, you need to understand the trend of the market. If you can't understand the trend of the market, if you don't know what the market is doing, there's a big problem. Number one, you just need to nakedly look at the chart and see that this thing is on a downtrend market, or this is an uptrend market, or this thing is consolidating. You just need to understand it by merely looking at it. All right. So when you look at Euro USD here on daily time frame, you don't need the soothsayer to tell you that this thing is in a downtrend market. And this is a what? A downtrend market. But that trade I took is a counter trend. When I mean a counter trend, it's just like you are going against the trend. But you are going against the trend because you saw a shift in market structure. That shift in market structure you saw was a change of character. Do you understand? It's a change of character. So, and this change of character happened where? On a daily time frame. It didn't happen on 1 minute time frame. It did not happen on 1 hour time frame. It happened on a daily time frame where structures are so strong. Do you understand? So since it happened on a daily time frame, it has given us an early information that the market is about to switch from a from a downtrend market to an uptrend market. It has given us an early information that the market is about to switch from this downtrend market to what? To an uptrend market. And where is this change of character in any way? Look at this change of character here. So the market has been selling massively to the downside. We spotted this last BOS here. This is the last BOS, right? These were people on daily time frame that we are trying to buy Euro USD. They had that information. Now look at it now. They had that information with their setup, with their analysis. They knew that Euro USD is going to buy, as in it's going to buy. But it was too early for that. So what the market did? The market bought to, and the next day the market what? After some few days, after like 5 days, the market reversed and hit their stop loss and weak all of them was out. The next thing we saw the market come up, consolidate, and then finally the market now pushed to the upside and broke all this structure. And the moment the market broke this structure, you see, the market has given us a change of character. Now you're gonna argue with me and say that this is not a change of character now. This is a week. Now, whenever the market break a structure with a week, it is not a BOS, neither is it a change of character. It's just like a rollback. Do you understand? Just like a rollback, like the market just wants to go back. It just cleared liquidity from that high. But after that week, and you spotted that the next candle closed above that week with a full-bodied candle, this could be a week now. Let's use this particular trend line now. Let's say that this now is a candle, right? This is a candle. I'm now teaching you analysis. So this is now a candle, right? And this candle actually, this change of character started from here, and this change of character happened this way. Let's say it happened this way. All right, so this is a high, this is a high, oh, this is a high, and this is a low. So this is something that look like this now. So let's say that this kind of thing happened. Then this is not a change of character. Let me look it. This is not a change of character because the market broke it with a what? With a week. It broke the very particular high with a week. So if the market broke it with a week, it is not a change of character. But it will only be a change of character if the next candle close with a full body candle like this. Close above that week with a full body candle. That is now when it will now become a change of character. Okay, that is now when it will now become what? A change of character. So that was what really happened there. After the market broke it with a week, the market now what? retrace a little with this very particular candle, and then now close above that this very particular week with a full body candle. This is a full body candle. Look at it very well. It's a full body what? Is a full body candle. So the moment I saw this thing, I've already known that this is a change of character. So what is the next thing to do? The next thing to do now is to mark out my extreme demand zone. Is to mark out, you can call it a demand, you can call it a, I don't know if it's in a downtrend, I think it's a demand zone, right? Okay, you can call it a POY, you can call it another block, or you can call it a what? A zone. They have numerous names they call it. Do you understand? So don't get yourself confused when you start hearing somebody saying this is a demand zone, is other block is this. All of them are the same. All right. So now what I'll have to do now is that I will just mark out the particular candle here. So now you're gonna be asking me, why am I marking out this candle? Why am I marking out this candle? Now, the one thing that when you go to SMCA, there's something you want to see. That thing you want to see are three things. You want to see a clear of liquidity. You want to see what? A clear of liquidity. Now, what is a clear of liquidity anyway? A clear of liquidity is when the market has cleared, or when the market has cleared the stop losses of what? Of many traders. I think a clear of liquidity is very different from inducement. When you hear about the word clear, when you hear about the word clear, it means that the market is clearing some people. It is hitting some people's stop loss. It is haunting some people's what? Stop loss. But when you hear about inducement, it means the market is what? The market is creating a trap. Here is how it looks like. Now, looking at this now, the market will push up. Let's say the market push up, right? And then the market print a new high, a new low. The market will now, before the market will remove this very particular high, it might make a little retracement like this. And the next thing you see the market breaking this very particular what? High. Now, when this kind of thing happens, now you as a trader will be looking, you will tell yourself, I will buy from here, I will buy from here. Most of you will end up marking out this very particular zone. You mark out this, you still mark out what? You still mark out what? This is improper. You don't need to be doing this kind of thing. You need to identify where the inducement is, and where the what, and where the other block what is. So when you must have seen this kind of thing, number one thing will happen here. So let's say that you came to the chart, or let's say that this thing looks this way. Let's say you came to the chart, it looks this way. Number one thing that you have seen that this whole thing now break a structure. It broke a structure to the upside. That's number one thing. It broke a structure and gave you what? BOS. This is it. This is a BOS. Now, and they said an SMC, for you to mark out another block need to clear liquidity. And also another block need to break a structure. Now, if you are to consider what is a clear of liquidity, these people that took a buy from here, these guys that took a buy from here, maybe they are targeting somewhere around there. Maybe they are TP. They're waiting for a buy around there. They're waiting for a buy here, and then they kept their stop loss just like this. They kept their stop loss this way, and then they targeted something like maybe 1:3 or something thereabout like that. And then the market was buying, the market was buying. So they were like, when the market started retracing, they were like, this it is a normal retracement. Most of them might have marked out somewhere around there, believing that the market is going to respect it. All of a sudden, the market now came and weak all of them out and started going in their direction. Now, this can be very painful. It can be very what? It can be very painful. But you as an SMC trader has used this particular thing as a confirmation and start waiting for the rest of the criteria to be what? To be met. The moment you see this kind of thing, this is a what? This is a clear of liquidity. This is stop hunt. Do you understand? Or you can call it a liquidity grab. Anything is a, that they normally like giving it an English name. You can call it clear of liquidity, you can call it induce, you can call it stop hunt, or you can call it what? Liquidity what? Grab. So the market has cleared all their stop losses. The next thing, the market started going in their direction. This kind of thing must have been happening to you. So the when you see this kind of thing now, the next thing to do now is that your structure has cleared liquidity. It has formed a BOS. Now the third step to do now is to mark out your point of interest. Know that the number one thing I did is that the overall number one thing I found out is that it break a structure. The second step, it cleared liquidity. The third step, we are now looking at what? To mark out our what? To mark out our zone. So before we even mark out that our zone, we need to know whether that our zone have an inducement. An inducement are trap. Are what? Are trap. It's just like a place the smart money or smart traders or the forex market has created a something that looks like it's going to buy from there when it's not going to buy from there. It could look like this. It could look like this. like this, the market returning back like this way. When the market printed a new high, the market started retracing. But this is what? This is an inducement. So what you have to do is to mark out the extreme what? To mark out the last candle that form all these BOS. Are you getting me now? To mark out the last candle that gave this particular what? BOS. Marking out the last candle that let you give BOS is what? Is normally your 78% Fibonacci retracement tool. If you want to know more about Fibonacci retracement tool, I've made a video on it. The Fibonacci retracement tool can help you in marking out what your point of interest. Normally, the 78% Fibonacci retracement tool is your point of interest. Are you getting me now? Is your order block. So, and it is normally your last extreme what? Your last extreme zone, which is here. So, the moment you mark it out, now this very particular place will not be a zone. It will be what? It will be an inducement. It will be what? It will be an inducement. It will not be, I will buy from here, I will buy from here. No. It will be what? It will be an inducement. And the least thing for you to do is to wait. Is to do what? Is to wait. Maybe the market will start doing something that look like this. The market will start doing something. The market might even come back, respect this inducement, and even buy for a long period of time. That does not mean that this thing has failed. That does not mean that this thing has totally failed. It has not failed. What the market did, and maybe the market somewhere around that inducement level for SMC traders are always 61% Fibonacci retracement to. So there is always a higher tendency that it is going to respect. So whenever the market tap into it, you might see that the market is buying. Don't feel panic. Don't feel like, oh, I'm missing out on it. You are not missing out on anything, my brother. You are just, your criteria, your confirmations are close. They are already, they have been met. Do you understand? So the moment the market might do something like this, respect this zone, the next thing you see, the market will now tap into that zone. The market will do what? Will tap into that zone and push to the upside. Now, what the market has did is that the market has respected your what? Your analysis. You see? Can you see that now? This is it. The market induced some people here. These people that took this very particular buy from here, these guys that took this buy from here, maybe their TP is around this zone and they might not want to close it. Maybe their TP is what? Around this zone. And when the market buy a little, the market is now retracing, the thing that is going to respect. The market now weak all of them out and enter here. You need to understand that these guys that enter there, their stop loss can never be here. This is the forex market we're talking about here. Their stop loss can never be what? The stop loss can never be here because of what? Because it's gonna give them, their stop loss is going to be very, very big. So their stop loss will be what? Their stop loss will just be under this low. Their stop loss will just be what? Under this low. And when the market now weak them out, they start going in their direction. All right. So what just happened there is this is a clear of liquidity, and this is what? Inducement. So that was what really happened there. You could see this is what? Clear of liquidity. And then maybe the inducement is not clearly seen, but you just need to train your eyes. This is the what? This is the inducement. This is the what? This is the inducement. Now all I have to do is to scale down to 4 hour time frame to do what we call refining the zone. When I refine the zone, I equally do what? I equally mark out this my inducement very proper. Do you understand? You know, it is not everything I will dish out here on YouTube for free. There even more to this, but I believe that following these steps as well is going to assist you. All right, that is why I encourage you to join our online mentorship class. These things are going to be very, very simple for you. If you look at our students, this is what they are doing, and they are returning a very good risk to reward ratio. They are making it for themselves. I encourage you, join our online mentorship program. These things are going to be very, very easy for you. All right. So now when I scale down to 4 hour time frame, I will refine this zone. So when I scale down to 4 hour time, remember that the market has not gotten to the particular level. Look at that zone. When I did that analysis, the market has not reached here. When I did that analysis, the market has not reached here. So what I have to do now is to refine the zone. I will now refine the zone down to the particular one, down to the particular 4 hour candle here, the particular 4 hour candle. Now, a lot of you guys are already looking at it to go in for a buy. Look at how the market weak you out and tap into that zone and what? And bought massively to the upside. Now let's go to SNES to try this thing. Let's go to SNES so that you understand more better. Do you understand that? So let's go to SNES. We'll try to hit that very particular part the market's played out and reanalyze this thing on 4 hour time frame so that you will see in details of how this thing what is playing out. Let's allow it to load. Allow it to load a little. So while it is loading, we just need to be looking at this again. Just need to be looking at this. Or maybe I might even use anything like live account to show you. account to try it. So seems I'm having a poor network over here. So right, so look at this. So let's keep talking about this. So you see, this is an inducement, and this is what, and this is a clear of liquidity. This is an inducement, and this is a what, a clear of liquidity. So I don't know why this is not opening. I don't know. All right, okay. All right, it's here. Watch this video to the end. When I analyze BTC USDT, you're gonna see that you see the same thing. Do you understand? You see, you're gonna see it's still the same thing. All right. So it's coming up. So we're going to be using 4 hour time frame on Euro USD, because remember we went to daily time frame just to see the trend of the market. The market was bearish. We discovered that the on daily time frame. Then the moment the market changed character, then we started looking at, we know it's a counter trend. We started looking at our SMC criteria. We spotted a clear of liquidity and an inducement, and we realized that our point of interest actually broke a structure. Now the three things has met: clear of liquidity, break of structure, and inducement. So we now proceeded in marking out our extreme points of interest. So that is the same thing I'm going to do here now. So what I'm going to do now is that I'm going to hit that very particular part, because this is SNET backtesting tool. So this is it on 4 hour time frame. On 4 hour time frame, right? Just exercise some patience, please. Exercise some patience. So this is it on 4 hour time frame now. All right. So look at that very particular part. So I'm going to clear it. I'm going to hide this very particular stuff. Let me hide it from here. I'm going to hide it from somewhere around this zone. And I will equally show you when the markets change character very early, even before that daily time frame change of character. I will show you now. I will show you. Allow it to load. I will allow it to load. All right, allow it to load. So remember, if you are looking for a free backtesting tool to backtest on, or to backtest your strategy, SNS offers that you get. Just that you cannot switch from time frame to time frame. All right. So this was that first BOS we had. This was that first BOS we had here. This was that first BOS here. All right. So this was that first BOS, right? So I'm going to lock it, and then the market we now play price forward. So the market started pushing to the upside. So let's just assuming that we are waiting for that change of character. Do you understand now? So let's assume that we are now waiting for that change. So look at what really happened then. The market changed character very early here. The market change. This is on 4 hour time frame. If you go down to something like even 1 hour time frame, this change of character even happened before year itself. So this was the first place the market changed character. A lot of us must have been looking at this particular candle here now. We must have been looking at this particular candle to go in for this particular one, to go in for this particular buy. Look at that particular candle here. All right. So this we must have been waiting for the very particular candle. We are waiting for the market to return back, but the market what did not. That is why I am constantly telling people, even my students, that trading is all about patience. Trading is not something you just come that day, you say, I want to make money. No, nah, my brother. And we're going to mark out here as what? As our inducement. Because our inducement is always that failed retracement. That failed what? That failed retracement, or that trap before our point of interest. So this is our inducement, and this is our that our unmitigated what zone. It even happened very early. Do you understand now? So you see how the market was buying. We are not interested. We want to see the market return back. So now you see, we start playing price forward. So when the market return back, the market respected support and resistance traders are in the market already now. And you will feel like maybe your friend must have posted this thing. Oh, more I've missed out on something. No, all this buy, all this. You'll be crying, this kind of thing. And finally, the market has broke. The market has changed character on daily time frame. This was that daily time frame high. The market has broke a structure on daily time frame. This was that daily time frame high. Then you will be like, oh, man, I've missed out on all this buy, everything. You start being frustrated. Maybe this or that. Shut up. You're not. Stop depressing yourself. There's a time you wait for something. Don't say that this thing will take ages for it to happen. That is number one problem I have with you guys. Don't say it's going to take many years for you. No, it's not going to. This thing happened just in place of 1 week. And during that 1 week, I was in other pair, still catching something. So why would you be feeling like that this thing is not going to come back? It's certainly going to come back. Leave all these things doing. So looking at it as we keep playing price forward, you see how price was returning back. Remember, price has broken a higher time frame structure, which is now a change of character, and it just need to give a full retracement, and it's now returning back to that. So you see, so we are waiting, we are waiting. Now, don't forget that a lot of people now who normally says we'll buy from here, we'll buy from here. Don't forget that there are people like that. They'll say we'll buy from here, we'll buy from here. But you are very, as in you, in all these things from here, from this very particular low to very particular high, you just want to do one thing. You just want to do one thing, and immediately, do you know that if the market hits the very particular place and disrespect this zone, number one thing, you are not going to feel bad. You will just have a BOS. You just have a what? A BOS, and you just need to wait for a retracement to keep selling to the downside. That means you will know that this daily time frame change of character is not holding anything. Do you understand? But when you say I buy from here, I will buy from here. When the market hits your stop loss here again, hit your stop loss, you go tire. You will tire, and you know you will feel very what? You feel very bad. All right. So we love making things very simple. So now you see the market has tapped into that zone. Look, even when the market opened, there was a massive gap down. So you see, boom, the market tapped into that zone and respected it. And you know how we do it. You know how we do it. Our entry criteria. That's how we do it. So get, so that is it. I think we were risking around 45 pips on. I risked around 45 pips on that setup that day. So you see, I was risking around 45 pips. So we have our entry model. So which I will advise you, I will encourage you, just sign up. Sign up with us. Believe us, all these things will be even if it's not that we are not going to lose your, but your go to my Telegram channel. My risk to reward ratio, my return ratio cannot be compared to my losing rate. Okay, my return ratio are insane. Even the BTC we are hitting back to back will speak for itself. So then look at this now. You see how the market played out. Very good. The market is moving up. I can see, and finally we have a full TP. Very simple, very simple. And you see our waiting paid. Our waiting what? Our waiting paid. It paid perfectly fine. You see how the market played out, tap into that zone and bought massively to the upside. Now let's try BTC USDT because we see that we are wasting more time, or we see that the time is very fast. So let's see. Let's go to BTC USDT. So you see how it played out here. So now let's go to BTC USDT. So looking at BTC USDT, we have been on fire on BTC USDT. We have had like 3 wins in a row in BTC USDT, which we want to analyze again. We want to analyze. So for you to see that the strategy is playing out in all pairs. It's not only one pair, it is playing out in all the pairs. Do you understand now? So we have to stay a little bit patient. All right. I think I'm going to pause. Okay, right. You can look at it here. So very cool, very fine. This is here. All right. So this is it. So let's try to see how we cut this very setup. This one, this one, this one. So you see, massive. So we're going to try to cover it now. So the first thing I'm going to do, I'm going to go to a more cleaner chart. Just go to a cleaner chart. You understand? So let's go to a clean chart. The reason why you need to go every time you come to the chart, you go to a clean chart is that it is going to help you. At least your mind, your analysis, everything will be very, very clean. So let's clear every stuff. So let's clear every stuff. We're gonna clear every stuff that we have cleared every stuff now. We're trying to analyze something here. So now the first thing we do is we go to daily time frame. So what is BTC USDT doing? Remember that it was all this sell we caught, all this sell and this buy. Look at it. This sell now, this thing that sold one, two, three. These three candles that dropped was the sell we caught, and this long candle was the buy we caught. And somewhere around this sell again was the sell we caught. So look at how it happened. So I came to BTC USDT on daily time frame. I realized that this thing I've been buying for a long period of time. I don't need time to explain all this thing. So when the market came here, the market was consolidating. I will call this in a consolidation. There's no change of character here. So we spotted a, a clear of liquidity here. Most of you will say that this thing is a BOS. Okay, this is not BOS. This happened even on daily time frame. This is not BOS. This is not BOS. Let me explain to you. This is not BOS. This is a clear. Do you know why I call it a clear? These people that are waiting for a buy, their stop loss is here. For me, these people that were longing this market, their stop loss is here. When the market retraces, they waiting for a buy, their stop loss is here. When the market came down, their stop loss is here. Their stop loss is here. Their stop loss is here. All these people that you see that is trying to push price to the upside, their stop loss is just resting on that here. And these guys always know where your stop loss are, where your stop losses are. So they will always look to hunt that your stop loss. When they hunt that your stop loss, they will play. They will play. You understand? So you see, when the market hunts their stop loss, the market went in their direction. Very painful one. And again, there were some people that were marking out this candle. You see this candle now? They were marking it out, and they were hoping that when the markets come here, they have gotten a long-term sell. Right? They were right. And you see, when the market happened, the market sold, though, the market gave them very good risk to reward ratio. This thing that happened there was a very good risk to reward ratio. But for the market to sell for a long period of time that we are anticipating for, the market had to weak them out. What for? Why is the market weakening them out? That's the question you need to be asking yourself. So the market had to weak them out and still went. You cannot compare this profit and this profit. They are not the same. So you get, so these two things that happened there are clear. You get, these are clear. It is clear. This thing is clear. This thing is clear. Okay, this is clear of liquidity as well. This is clear of liquidity. So this is clear. This is clear. There is no change of character here. Neither there is any BOS. Do you understand now? So the thing I did when I came to the chart, I spotted this thing that happened this way. All I did was I marked out this. I marked out this candle. Do you know why I marked out this candle in the first place? Remember that this thing has not gotten to the particular place. The reason why I marked out this very particular candle here on daily time frame is that I spot a clear of liquidity. And then I started looking at what the market is doing, internal structure. Those in VIP class, in the VIP class, understand what I'm saying about how to read the market from internal. You read the market from internal. So when we understand that the market has already given us an internal structure BOS, we know what to do. We know that the market is going to what? The market is going to come back. And a lot of things that we have already used to back it up, which we know that we are going to, but we're going to give you some things here. So he knows that when the market break, you need to come back. Do you understand now? And any other thing, it is for VIP. So now you see when the market broke this particular place, it keep pushing to the upside. The market has to weak some people out here. So number one, this is a zone. This is an unmitigated zone. And in this daily time frame, the inducement has been seen already. The inducement is here. Look at the inducement. And the inducement is in form of this equal low. Equal low. There are ways you can identify inducement. Inducement can come as a trend line inducement. It can come as equal low inducement. It can come as equal high inducement. It can still come as what? As a what they call it again? As I've forgotten this. As a fair value gap as well. Do you understand? You can spot all those inducement there. So this is an equal low what inducement. So you need to identify this happening on daily time frame. So the next thing we have to do now is that remember we cut all this cell. So before I cut this cell, I thought this cell was even from lower time frame, from something like 4 hour time frame. From 1 hour time frame, I saw that candle, which will go down to 1 hour time frame. But what I'm going to do now is that when I go down to 4 hour time frame, I will refine it. I will refine this particular candle. You understand? I will refine it for particular daily time frame candle, because I'm not going to enter with this. If I enter with this, my stop loss will be very, very big. I don't want to do that. So when I go down to 4 hour time frame now, remember, as we're going down to 4 hour time frame, we're also looking at to get the other block that help us to sell all these things. We are looking at the other block or this POY that help us to sell all these things. You understand? So this is it now on 4 hour time frame. So on 4 hour time frame now, all I did was to refine. Very important. You have to refine. So most of you are going to shout Jesus Christ. All this zone of 4 hour time frame. Remember that this zone of 4 hour time frame, this was how it looks like. This is it now. This zone, this is it. All right. So this is it. Okay. So you're gonna ask me, all this zone on 4 hour time frame, you mean all these things on 4 hour? I think we didn't risk up to this. We were risking I think around 20 pips, around something like 20 pips or 25 pips. I think something like look like this, something that look like similar. This is now 270. This is now 2,761. This is not 2,760. This is just like 270 pips. Do you understand? You are going to shout Jesus. 270 pips. Yes, now we know. We know. But when you have this kind of risk, you don't have to be risk. You don't have to increase your lot size now. It's because this is how our strategy plays out. So all you have to do, even if you use 0.01, you are just going to risk something around 20 something dollar, and you must have made 100 and something pips, 100 and something dollar. Do you understand? The truth of the matter here now is that even if our risk is high, we try as much as we come to return back 3 times of that our risk, which is important. Do you understand now? So this is it now. So you see how the market played out very perfect. The market played out, tap into that zone and bought massively to the upside. Now, where was that particular before this market sold? Where was that other blood that helped me to sell this market? Now look at it. When I spotted that the market cleared liquidity, I spot a lower, a high, a low, a new high, a new low. Looks such like the market is consolidating. These people are trying to sell. The market push up again. Sellers step in. They try to sell, and the market show the little. The markets are reversing. You will start panicking. What the market reverse, and then weak all of them out. Immediately the market weak them out. The market has given me what? Inducement. The market has given what? Inducement. So when the market came in, it was consolidating. Sometimes the market sold, and then the market gave us internal structure what? Internal structure BOS. So you see, this is an internal structure BOS. So immediately we found this internal structure BOS, all I did was to what? To look out for my inducement before I mark out that point of interest. Where's my inducement? My inducement is this. This is my what? This is my inducement. Where is my point of interest? Look at it here. Look at my point of interest. So this is my point of interest. So you see how this was my point of interest. Let me lock it. So you see, as I marked it this way, inducements are always very close to that point of interest. They are always very close. That is why you will always notice that whenever you enter that buy, this market will just weak you out small and it start going in your direction. You will feel bad. Sometimes you will sell. This thing will just take you out small. It will sell, it will start moving. You will feel bad. This is it. This is it here. This is it. Can you see it? Imagine that you entered there and you could not keep your stop loss above. Your stop loss was there. They will just pick you out and start going in your direction, and you're not going to find it funny. So you see how the market came in, tap in, and now sold massively to the downside and give us all this profit and still return back. The same thing. So now let's see how we're able to get one. So when we spotted this one, the market pushed to the upside. Let me delete the particular stop. So the market has mitigated that our higher time frame point of interest. The market now pushed to the upside and it is now consolidating. So look at how I got that very particular sell that happened here. I went down all the way to 15 minutes time frame. So on 15 minutes time frame, look at how I did it. So remember, we are not just doing this, we are not just marking out this in any way in the structure. No, we're not doing it like that. So when the market tap into here, we got a BOS. We got a BOS. And we got a retracement this way. This is a retracement. And then we saw how the market has been buying. How the market has been buying for a very long period, as in the market has just been pushing to the upside. So now we saw how the market is now returning. So normal thing you have to do is not to mark out your point of interest. Mark out your point of interest this way. Wait for market to come to it. You have to mark out your point of interest this way. So that time I gave her that signal, I think it was somewhere around this zone. It was somewhere around there, right? So when the market was turning back this way, we know that the market is heading for here. Do you understand now? So when the market came down to here, it pushed up, pushed down, pushed up, pushed down. The next thing we saw, boom, to the downside. And this thing number one, we now have a BOS here. We now equally have another BOS around this zone as well. So you see, so immediately we spot this BOS on 15 minutes. Now it has given us that yes, that something is about to happen. The next thing we saw is a what? A clear of liquidity. Is a clear. Remember that the clear must be with a week. It must be with a what? It must be with a week. It must be with a week. The reason why it must be because it's a week that they use to collect the stop loss. Do you understand? So this is it now. So the next thing I have to know is there any inducement? There's an inducement. This is an equal high inducement somewhere around there. Equal high inducement. So now where is the other block? This other block here. So you see, so we have to wait for it. We have to wait for it. We have to wait for it. So when we waited for it, after everything, you saw how the market, these are all the inducement. So you see all these guys that sold from here, their stop losses are just here. Their stop loss can never be above here. If you trade a BTC very well, you know that you will never keep your stop loss here because of what? The risk is too much. Do you understand that? So you see, after everything, the market did what? The market now returned and hit there and dropped massively to the downside. Can you see? Very simple. Very simple. You see? So we spotted our inducement. We spotted everything. Inducement, order block, and the market what? So to the downside. So you just need to understand in detail that what? That clear of liquidity is when the market will return back to clear some people, to clear the stop losses of all these guys. The moment you see this thing, it is always with a wick. It is always with a what? It is always with a wick. It is not with a full body candle. When you say don't call it a BOS, call it a clear of liquidity. Now the next thing is for you to do is wait for the market to break to the upside. Immediately the market breaks to the upside, it will give you an added advantage. Now the next thing to do is for you to wait for the build of liquidity. You need to wait for a trap. You need to wait for the market to build something that look like this. If you see this kind of thing happening, smile. Don't feel bad that you are missing. You're not missing out on anything. If you see this thing like 10 times, it is going to play like 6 times. Do you understand? So when you see this kind of thing, you should be very, very, very happy. Don't see that you have missed out. The next thing now to do is what? Mark out your demand zone. Mark out your what? Mark out your demand zone this way. All right. So now we see you now have to wait for the market note to return back to clear all of them. You now have to wait for the market to return back and what? And mitigate your entry TP to the particular high. Now here will be what? Here will be that our inducement. Here will be that our what? Here will be that our what? Our clear. Very simple. Don't forget that your order block must break a structure. Must do what? Must break a structure. Even if it is sell, even if the market is selling this way, even if the market is selling like this, the next thing you saw the market clearing up the above, and then something look like this. Don't feel bad. This is what? This is what we call BOS. This is a BOS. This is a clear. This is a clear. And you see this is a clear. Where is our demand zone? Where is our demand zone? This is our demand zone. Demand zone. All right. So please, if you have loved what I have done on this particular video, please like and subscribe to my YouTube channel. Turn on your notification icon. Turn on your notification button so that you will be getting very this kind of benefit, this kind of videos that are packed with a lot of benefits. Not all traders is going to show you all these things. So please like and subscribe to my YouTube channel. Turn on your notification icon so that you'll be the very first person to be notified by YouTube whenever I drop whenever I drop this kind of what this kind of videos. Also, if you have been looking for a free Telegram channel where be getting your free setups, look at the description below. You're gonna join the particular free channel. It is very free. It is free. It is free. I drop free signals here. I drop free signals. I don't withhold. I drop free signals here, and you could see the ones you have dropped in the past really played out. And I know that when you join us here, you will probably be making money. And also advise you to please consider using the contact below to contact us on WhatsApp to proceed in terms of registration. There are more to this that you're going to learn. There are more to this you're going to understand, because there are also some things you need to understand well how to read structures. Do you understand? But I know that this video will go a long way in helping you in understanding what SMC is all about. I would want you to share your review or your comments below. Tell me the thing that you truly understand or the way that is you are still finding difficulties, and I will pack all those things and still make a video for you guys for you to understand. So for you, this is where I will draw the curtain, and this is where I will come to an end of this particular video. And I say a warm thank you for staying to the end to watch this video. I say thank you so much, and I know that you're going to come back the next time. Thank you, and may God bless you.